Hey friends, welcome back to Inspired by Real Estate. You know, one of the things people often ask is, how do I get a mortgage? Well, I thought I would give you an insider's information today and actually show you what we do to help people get a mortgage. The first thing that we have to figure out is what you want your monthly mortgage payment to be. And we use a couple different forms. One of them is the Quick Start budget. We can look at your budget and we can figure out, at Christmas time, how much do you want your mortgage payment to be? On birthday months, how much do you want your mortgage payment to be? When you're on vacation and you've got to make your mortgage payment, how much do you want that to be? And the mortgage payment consists of the loan principal and interest, plus the property taxes, plus any homeowner's insurance, plus any mortgage insurance. So I'll show you what that looks like because those numbers fluctuate depending on where you live, how much the property taxes are, how much the homeowner's insurance costs. And once we have that concept of here's how much our mortgage payment is in our budget, then we can back into the loan amount. So let me show you what I'm talking about here. So this is the mortgage monthly cash flow plan that we work on. First, it's got, how much are you making each month? And then we break that down into how much are you spending on food and clothing, how much is your savings, how much is your housing, and what do we want to budget for that, how much are utilities, and then how much is your insurance, your monthly payments worth of debt. Then this form calculates out here's how much we have to spend each month, and we can look at our budgeted mortgage payment, taxes, and insurance. And then once we get that information, I'll show you what that looks like in this form. So this is the loan origination software, and you can see my Ken customer here. He's got a fake social security number and a fake date of birth and a fake phone number, but it gives you an idea of what this looks like as we go forward. Here's where old Ken lives, and we go out, we order his credit report, and we can look at his credit report here, and let's just take a look and see what old Ken looks like. So Ken has a 650 credit score, 639, and a 620. We go by the middle credit score depending on which one is the middle. You can see that he's got his mortgage for his car, credit card, and then another credit card, and then that's pretty much it. So that's a good job keeping your debts low. And we're going to import those liabilities over his car payment and his credit card. We're going to import that over into the system. Then we can scroll down here and look. Now Ken said he wanted to keep his payments about $2,500 a month. So that equates to about a $300,000 purchase price. He's got 3.5% down, and that gives us this mortgage payment of $1,581 each month for principal and interest, and then you have $100 insurance, and then $575 for real estate, property taxes, and then mortgage insurance. Now, depending on where you live, your mortgage property taxes, they may not be 2.3%. They may be 1%. Well, at 1%, you have a much lower property tax, and so your overall monthly payment is lower. But in other areas, you got a 3% property tax, and so it makes a sizable difference in your mortgage payment. And most online calculators just tell you what the monthly mortgage and interest payment is. It doesn't calculate in property taxes So we're going to calculate that back where old Ken wants to be at 2,500. So then let's look over here. We put in Ken's information. We input where Ken works. And then on page 2, this is how much Ken makes each month. He pays about $1,000 in rent right now. And then he's got about $35,000 in the bank. He's done a really good job of making some savings. Here's his debt that we imported in from the credit report. Gives us the final calculations, prepaid items, closing cost, and down payment. He's bringing about $16,000 to closing. Answer the final questions here. Do you have any judgments outstanding? File bankruptcy or foreclosures in the last 7 years? Are you a U.S. citizen, permanent resident alien? Do you intend to occupy this property as your primary residence? Now, at this point, you would be considered pre-qualified. And you're pre-qualified because your credit score is within the tolerant range and your debt ratio is within the tolerant range. But pre-qualification isn't really worth much. And so what we want to do is we want to go ahead and get you pre-approved to buy the house. So we're going to go into the automated system and we're going to request underwriting. We're going to use a Fannie Mae desktop underwriter. Submit this to DU. Let that run a minute, and the automated system will come back and it should give us an approval. Let's see here. System's a little slow. The anticipation is building. Okay, Ken, customer, you are approved and you're eligible to buy a house. Now at this point, you've gone from pre-qualified to pre-approved, which basically means that the system has verified that based on the information we input into the system, the lending agencies, FHA, VA, Fannie Mae, USDA, they would lend you the money to buy the house. And this is the step where a lot of mortgage companies just give you an approval and say, go start shopping for a house. However, I want to go a step further because when you scroll down here, the approval gives you a couple of conditions that we want to go ahead and get cleared up. If we needed rent verification, it would show up here. We don't need rent verification. Then we come to employment information, assets, and property information. Once we have a property picked out, this approval is subject to an appraisal verifying that the property is worth what the sales price is. These other two conditions here are very important. Employment and income information. Ken customer's employment history and income information for the last 2 years. Either the most recent pay stub and a W-2, or we need a verification of employment, automated or written. And then on the assets, we want to see how much Ken has in the bank, either via bank statements or a verification of deposit online. And the thing is, this two pieces of information we will take and we will go to underwriting with that. We will have the underwriter certify that you are approved and you're ready to buy a house. This is the difference between you and most of the shoppers out there. And we want to do what we can to make you look better than everybody else. Now, there's a lot of people online right now talking about you can do all this on your own. You can shop for mortgages on your own, but the truth is you can't do it yourself. One, you're not licensed to be a loan officer, and so you can't loan yourself the money. Number two, you don't have access to this automated underwriting system. And number three, you don't want to do it by yourself. You are not buying a computer or a camera or a TV. You're buying a house, probably the most expensive thing you will ever purchase. And you need a team of expert advisors to help you and make sure that you don't make